Good morning, everybody. Good morning. And as you guys can see, I'm not in a normal location. Hopefully the wind isn't too bad, so I'm gonna keep this short and simple. To keep it nice and sweet, this video is gonna be a double upload for you guys. It's gonna be a double upload. This video is gonna be the first video of the day, and there's gonna be another video later on tonight. But this video is gonna be an educational video. It's not gonna be a vlog. You're gonna see how I got to this area right here in the vlog later on. So make sure you just stay to the end of the video. If you want to learn how to trade, if you want to learn my system, my strategy, my everything, just continue watching the video, because that's exactly what we're going to be going over today. We're going to go over risk management, we're going to go over trading, and it's only going to be value, 100% value. Get your notebooks, get your pen and pencils, and study. At the end of the day, if you want to take your trading further and join a community of like-minded individuals, join the VIP Trading Network. But if you just want that free value, continue to watch free videos, continue to watch this video, get the free course, the free trading webinars, and continue to get the work done every single day. So with that being said, let's get straight into the video. But we're going to get straight on into it. So the main thing, the topic of today is I want to talk about risk management. Am I recording? I definitely am. Risk management. Why is risk management important? Because at the end of the day, I say this all the time, we can't control what's going to happen. The only thing we can control is what we're risking. At the end of the day, as traders, the only thing we can control is our entry and how much we're risking. We can't control if the trade is going to win or if it's going to lose. Unless, like, say, for example, you're in profit or something. Like, if, say, you're in profit already, there are ways to secure yourself from losing. That's all going to be talked about in risk management at the end of the day. Because some of you may be aware of when to break even, when you shouldn't break even. Some of you may be aware of what type of stop loss. Some of you may be aware of how many trades you should be taking, how much you should be risking. But a lot of you probably aren't. And at the end of the day, if you don't have a good grasp of having proper risk management, no matter how good your system is, no matter how good your strategy is not going to matter. Because if you're winning 100 trades and then on that one trade that you lose, you're risking 100 times more, those 100 trades that you won don't matter because it got wiped out in one trade due to bad risk management. And that's happened plenty of times. Anybody that's traded, they could tell you it doesn't take that long for a whole week, a whole month of profit to be taken away just in one day, one trade at that. Having proper risk management is going to be able to keep you in the game. Staying in the game is going to be able to just secure the fact that you're actually going to be able to trade another day. If you want to be able to trade, you want to be able to trade for a living, right? You don't need to be making $1,000 every single day. You just want to be able to secure the fact that tomorrow you're going to be able to trade, that next week you're going to be able to trade. You want to be able to have the opportunity to put your money to work. You get what I'm saying? But if you have no money to put at work, then the skill set doesn't really matter. But risk management is key. So the first things we're going to talk about, I don't have no notes today. We're going to be going straight off the dome. But risk management, that's kind of something that I don't really need notes for that. I kind of have an idea on everything that we're going to need to go over. So at the end of the day, how many of you, out of the people here, if you don't want to talk, you can just type in the chat too. I want to get an idea who trades they're going for a funded account, and who trades like their own like live money or like a live demo account, like that you're getting ready to deposit live money. I want to get like an idea from the people here. Okay, funded. What about everyone else? I want to get an idea for like what I talk about when it comes to like risk. Okay, funded. What else? Anybody else? I need at least like 2-3 more people. Okay, live. He said live. What about you, Marley? I was who's like going for a funded account, or who's like going like practicing to go live or is trading live? Funded demo, live. You're live. Okay, so it seems like it's about half and half. So I'll try to get a mixture of both. Because at the end of the day, you got to understand, depending if you're trading a live account, which more than likely you guys aren't going to be depositing a whole lot of money up front. Most people that come into trading, they don't have a lot of money to begin with. It attracts that type of person. You know what I mean? They come to trading to make money. So a lot of the time when you deposit money into your own live account, you're not going to be putting a lot of money, right? Like more than likely you guys probably don't have a live account with more than 1,000, more than 2,000. And that makes sense. But the reason I need to know is because the risk parameters you would use on a funded account is going to be drastically different than trading a live account. Because the less money you have to risk, the higher percentage you're going to have to risk to be able to make some money. If you have a $100 account and you're looking to risk $50 on a trade, you're risking 50%. Now, even though it's not a lot of money, percentage-wise, it is a lot. So if I were to say risk 1%, per trade or risk 2% per trade, and that's the most you can risk. If you have a live account with only $100, you would be only risking $1. And most of you aren't going to do that. You know what I mean? That's why I got to get an idea so I can go off of. But so I'm not going to talk about too much when it comes to percentage wise, but I'm going to talk about the things that you need to have in your risk management plan, essentially. Like we went over this before, maybe a couple weeks ago, maybe a month ago, but there's a lot of new people here, and so this is going to be beneficial nonetheless. So one thing you got to understand, you're always going to understand what is that percentage per trade you're willing to risk. And it doesn't necessarily even have to be percentage. If you have a live account, you will look at it as money. So how much money are you willing to risk? If you have a $100 account, how much money are you willing to risk? If you have a $100,000 funded account, how much percentage are you going to be willing to risk? Whatever it is, you got to understand how much you're going to be risking per trade. Why do you got to know that? Because at the end of the day, you don't have to lose more than you want to. If you tell yourself you're only going to take this amount of trades, risking this much, and if you lose all of them, it's only going to be a certain amount of money, you can kind of predict what a bad week would be. Because if you know how much a losing day would be, like your max losing day would be, and you're only allowing yourself to take a certain amount of trades per week, and you're only allowing yourself to trade certain days per week, you have a structure to where you already know if it's a bad week, you know how much you're going to lose. It's not going to be random. You can't leave nothing up to a probability. You can't leave nothing up to just hoping. You got to do it all yourself, essentially. I know how much a bad week would be for me. Do you know why? Because once I get to a certain point, I'm going to stop. Once certain things happen in my system, once certain things happen in my process that lead me to maybe like not want to trade, for example, maybe I lost the last 2 days, both of them were all losing days. I know not to trade that next day. That's something that's built in my system to keep me from risking too much. But the reason you need to have that is because you need to know how much you're risking per trade. And why do you want to know that? Because you don't want to blow your account one day. Like I said in the beginning of the session, you want to be able to stay in the game. So you got to understand how much you're going to risk before you get into the trade. You want to know how much you're going to risk for the day, a day before. I know how much I'm going to risk Monday. I know how much I'm going to be risking in a month. I don't know about necessarily in 6 months because it depends on the account size, but I'm talking about like short term, what you're going to be doing. What's the difference between a funded and a live? Essentially, a funded account is something like you're buying into, like you're taking a test essentially to prove that you can trade to get funded money, essentially. Think of it as like you're getting a credit card, a trading credit card, but your application takes a little bit longer than just a few notes. You got to actually prove something in the application. And a live account is just your money. You just deposit however much and trade that. But how much you risk per trade? After you have how much you risk per trade, you should have this in a notebook. You should have it on a sticky note, wherever it is that you're going to be able to know what it is. You got to know how much you're going to be risking per week. Well, I would say per day / week. Oh yeah, you better get your ass down, boy. Get down. But day or per week, you got to know how much you're willing to risk max during the week and how much you're willing to risk max per day. And this is going to allow you to not take bigger losses than you need to. Because if you know you're only allowed to take a certain amount of trades, if you know you're only allowed to risk a certain amount per trade, there's no reason you should have a day where you're losing more than is expected. Because if you know you're only allowed 2 trades and you're only allowed to risk $100 max, there's no way you could lose $500 unless you were over risking or over trading. Do you get what I'm saying? If you actually follow the rules, there's no reason a lot of you should be blowing accounts. There's no reason a lot of you should be failing challenges, at least short term. If it took you a month or 2 months, then that's different because that was something that took a while to happen. So it's not like it happened quick. But a lot of the time it comes down to not following the rules. Risk management is going to keep you in the game, and keeping you in the game is going to allow you to trade tomorrow, trade next week. That's the main goal. It doesn't matter if you lose today. It doesn't matter if you win today. Are you going to be able to trade tomorrow? Are you going to be able to trade in a week? Are you going to be able to trade in a month? That's the goal. A lot of people, they try to play offense when it comes to trading, but you got to play defense, because once your money is in the trade, a lot more negative can happen than positive. You can get slipped. Say something crazy happens in the world while you're in a trade. It might slip your stop loss and keep going down. There's more downside to being in trades than upside because most people don't have the experience that's actually going to allow them to take full advantage of the market. You know what I mean? When you have a certain level of experience, then it's a little bit different because now you have an edge and you know more than other people. And what you don't know, you don't know. What you know is different, but it comes down to experience a lot of time. But risk management is the one thing, no matter how how much experience you have, if you actually follow the plan, you don't risk more than you're supposed to. You say if you're going to risk $100 per trade, you actually only risk $100 per trade, not 150, not 125, because all that's going to do is add a little bit more emotions than there should be at the end of the day. If you tell yourself you're only going to risk $100 and you actually risk 150 and then you lose 200, do you think that's going to make you feel any good? It's only going to be negative. You just got to have common sense sometimes. But it always comes down to in the moment, because we can all say this, yeah, I'm not going to do that, I'm not going to do that. But that second before you're about to do it, you got to think to yourself, I shouldn't be doing this. It comes with a lot of self-awareness. But that's the main thing. How many trades are you allowing yourself per day? You need to have that written down. I recommend less. The least amount, the better. If you could take one trade per day, that's going to build the discipline to a level that is going to be crazy. Because me personally, I don't even take one trade per day. Because if I was taking one trade per day, I feel like my risk reward, I feel like my win rate will be cooked. Because a lot of time my first trade doesn't hit. But that's me personally. But if you could stick to one trade per day, regardless if you win or lose, it's only going to build discipline. Because if you can actually come to the charts, listen to yourself, and only take one trade, regardless if you win or lose, that's building a level of discipline and respect for yourself that's going to, regardless in trading, it's just going to be a good skill set to have as a human being. It's going to be universal. It's going to benefit you nonetheless. So after you have how much you're going to be risking per day, per week, you got to have the number of days you're going to be trading. Because most people, they'll trade every day if they could. You got to limit yourself. Now, how do you limit yourself? You can either get enough experience, say maybe once you have a year of experience, maybe 2 years of experience, you can kind of build enough data from journaling your trades to see what days do you take the most L's on, what days do you take the most W's on. So you can kind of see, and you also get intuition, because a lot of us, we know the days that we don't like as much. Some of us like certain days better than other people. It depends on what you're trading and what times you're trading. All of that depends on you specifically as a trader. But at the end of the day, you got to limit yourself to the amount of trades. And what I do, I have rules in place to where if I take 2 losing days in a row, I can't trade the third. If I take 2 W days in a row, I can't trade the third. All that does is make it so I don't trade every single day. That's really all it is. It just keeps me from trading every single day. Because if you trade every single day, it's only more risk. That's the only thing that is more risk. Yeah, you may want to take advantage of the trades, but at the end of the day, CPI happens every single month. Are you going to be running towards CPI every month? No. There's certain things that you just avoid. The market is going to be here next month. The market was here before every single one of us in this call was live, and it's going to be here when all of us are gone. And it's going to be here when our kids are gone and their kids are gone. It's going to be here. You just got to understand patience a lot of time. You don't need to be in every single trade. You don't need to be in every single market. You don't need to be in every single session. You don't need to. Where's Tonio? I hope he's in here. He's the person that needs to hear this shit. Where's he at? Where's that nigga? That nigga be trying to trade every session. And they stick to like 1, 2, like minimum at least. Like I feel like that's a good minimum for him, wherever he is. But once you have the number of days you're allowed to trade, have that rule in place. Maybe it's 3 days in a row. If you take 3 L days in a row, take the 4th off. Maybe if it's 3 W days, take the 4th off. You can have it however you want. Maybe it's 4. But at the end of the day, have it to where it's more than likely going to happen more times than less, because it's very common for me to either take 2 W days or 2 L days. So it's very often for me to have to take a day off. So it just makes it so I just don't trade all the time. And all that's going to do is kind of separate you from the charts, because if you kind of always have a day off, mentally you're just going to be at ease. You're going to start being able to be away from the charts without checking your phone all the time. You know what I mean? It's a level of discipline that only comes from experience, but it just takes time at the end of the day. But all these, you just got to have, depending on your account size, that's another main thing. Whatever your account size is, your balance, that's going to determine how much you're risking per trade, how many days per week you're allowed to take, how many trades you're allowed to take. Because like I said, if you have only $100 account, you can only risk so much, so many times before the account's gone. You know what I mean? So you got to structure in a way to where you have enough trades to be able to trade next week. You know what I mean? And maybe if that's only 10 trades, that's cool. Because a lot of time, if you're taking a funded account, when you're risking $250 or maybe risking $500, you probably only realistically have maybe like 6 to 12 trades, depending on what your account size is, if you're taking a funded account at the end of the day. So if you structure to where you only have that many amount of trades, but you know the chance of you losing, like what's the chance of you losing 12 trades in a row? Probably not that likely. What's the chance of you losing 4 trades in a row? Probably more likely. So what should you do? Probably not risk as much on less trades if your win rate isn't that high yet, because now the chance of you losing more money in that short amount of time is more likely versus if you kind of spread it out between trades. The one thing I always recommend people do is low risk. Low risk is always going to be beneficial because it's only allow you to get experience, build confidence without losing too much money. And when you win, you'll only make money. You know what I mean? So it's only beneficial. You may not get rich off it, but you'll build the traits and build the habits that you can use to get rich. You know what I mean? It's a slow grind. But these are like the basic things everybody should have in the risk management plan. But now I want to talk about a little bit more like in-depth stuff when it comes to like trades itself. So like trade risk management. I cannot spell. That's why I gotta be using Siri. But trade risk management itself. So the main things when it comes to managing risk on a trade is having a proper stop loss and TP. So stop loss meaning wherever you're going to be taking your L. Me personally, I'm never really using more than 30 to 50 points. And that's trading like the indexes. If you're trading Forex pairs, I really would say it's more up to you because I don't trade Forex enough to be able to say maybe you should trade with a higher or smaller stop loss depending on what you're trading because I don't got enough experience with it. But for the indexes, 30 to 50, you'll be cool majority of times. Some people think this is too much. I think 30 to 50 is cool. And if you're trading on like the 15 minutes to like the hour, the 30-minute, this is going to be more than enough in my opinion. 30 to 50 points is all I really need. And in my opinion, the TP, I don't really have a like number TP that I aim for. I just always aim for 1 to 2s bare minimum. And by 1 to 2s, that's your risk to reward. So if you're risking $100, you should be bare minimum looking for $200. That's just rule of thumb, bare minimum. Easy, 1 to 2s. If you can consistently get 1 to 2s, think of it like this. If you can constantly turn $10 to $20, what's the difference from risking $10 to make $20 from risking $1,000 to make $2,000, or risking $10,000 to make $20,000, or risking $100,000 to make $200,000, or risking $1 million to make another $1 million to make $2 million? You get what I'm saying? Anybody would do that. If anybody could put $500,000 into something and potentially flip it times 2 within a day span, fuck us day, you could probably do it in a couple hours in a trade. You got to remember the risk reward behind it because it doesn't seem like a lot when we're risking a little bit of money per trade. But in the grand scheme of things, I want you guys to understand the risk reward. If you're aiming for a 1 to 2, meaning if you're risking $100, you're looking to make $200, that's a 200% ROI. 200%. The average real estate property probably makes you a good 15%. And that's good. If it even makes you 20% a year, them billionaires are taking that shit up. They're taking them away. Like we wouldn't even have access to a property that pays us 20% a year. And we can make 200% on something in a couple hours, in a day, 200%. We just don't risk a lot. You know what I mean? If we were risking a whole lot of money, that's a lot. You know what I mean? So the fact that we're risking a little bit of money makes people do what? Aim for 1 to 10s. 1 to 100s. They're trying to turn $1,000 into $500. They're trying to turn $50 into $400. Although it's possible that you want to aim for consistency. What can I consistently do? You're more likely to consistently be able to get a 1 to 2 versus consistently being able to get like a 1 to 5 or consistently be able to get like a 1 to 10. You know what I mean? Consistency is the key. Anybody can win a trade. Anybody can get lucky and win. Fuck that. Look over here. If I just would have held the trade, I could have caught this shit. But I would way rather guarantee that I was able to get this versus just holding and hoping that it would go here. You know what I mean? Because I could have easily hoped, and that shit would have dropped. You know what I mean? But you know what I can guarantee you get? That 1 to 2 that was all the way down here. I guarantee got that. You know what I mean? And even though I left a lot on the table, I can still come back next week. All this did was build the confidence for me to do what? Maybe leave my runner a little bit longer next time. Maybe when I'm risking a little bit more money, I could leave a runner. All it is levels to it. You know what I mean? If I would have had the chance to make $10,000 on this trade and still leave a runner, I would have did it. But I'm not at that level yet. You know what I mean? It just comes to different stages. Trading, once you got the skill and the risk management down, all it is risking more money per trade and getting comfortable handling the emotions at that point and being able to find the way of making the money to risk. Because most people, they're trying to look at trading as a way to make their money, when in reality, you need some money in trading to make money. You know what I mean? Because you get only what you're willing to risk. You're not going to make $500,000 from risking $100. It's just not how it happens. It's all risk reward. So coming back to over here, risk reward, 1 to 2s. It may not seem like a lot, but you want to go for consistency. If you can get a 1 to 3, that's cool too. If you can get a 1 to 4, that's cool. But I'm going for what I can guarantee get. And even then, I fail sometimes to get a 1 to 2. I fail sometimes to get a fucking 1 to 1. And there's people over here aiming for 1 to 10s. I'd be like, bro, you got it. I'm over here hoping for 50 points, and you're over here looking for 800. I'm like, yeah. Who was it though? Jay? Jay, if you're here, you're the one person that you did say it was gonna fly. And I ain't believe you. And that shit did fly. Wherever, he's not here right now, but yeah, I'll give him that. He had his TP all the way up there. I was like, nah, that shit high. He was like, nah, that shit getting hit. Yeah, that shit got hit times and went up 300 points more. That shit did numbers. I ain't gonna lie to you. But like I said, 1 to 2s. More story, 1 to 2s. Where's your TP? 2 times what you're risking. If you're risking 50 points, your TP should be 100. If you're risking $100, your TP should be $200. Simple. If you're risking $10,000, your TP should be 20,000. That's cool. 200% in a day. So you gotta stop being unrealistic. Aiming for a 1 to 10, even though it's possible. How often are you gonna do it? You know what I mean? I can constantly come in here and get 1 to 2s. That's the main thing. Consistency. So once you understand what your risk reward is, once you understand what your stop loss is, when are you going to be breaking even? And what is breaking even? Breaking even is essentially taking risk off a trade. So if I were to go over here and look at this trade, say for example, price went all the way up here. Why would I potentially risk losing money on this trade, right? If I'm already up all this, right? It doesn't make sense. That's why we break even. What is breaking even? Breaking even is just moving your stop loss. So say if my stop loss was right down here, I would just move it to my entry or maybe above my entry somewhere. And all that's going to do is make it so if price comes all the way back to where I got in, it just stops me at break even. I lose nothing. I make nothing. And that's cool because no risk. That's cool. I guarantee a day where you lose no money feels way better than a day you lose money. I can guarantee you that. And I guarantee you can all agree. That's a fact. So breaking even is very important. But now you got to understand when you're going to break even. Because there's going to be people that are aiming all the way up here. And they're still in this trade holding it all the way up here past my screen. Like, right? Like the trade's going and they don't even see it no more. And they're like, nah, I'm not going to break even yet. Like it doesn't make no sense to do that. Because I guarantee you the same way this can go up, it can go down. Don't pretend like it's not possible. If you've seen it go up this fast, why could the possibility of it falling that fast not be a thing? Look at the days before. Look at the grand scheme of things, right? So you always got to understand this is a probability game. When do I break even? I break even at 1 to 1. That's me personally, because if I'm risking $1,000, why am I going to be up 1,000 and potentially risk losing that 1,000 still? That doesn't make sense to me. Now, some people, you may disagree. You may want to aim for a 1 to 2, then break even. You may want to aim for a 1 to 1.5. That's fine. But make sure you stick to it, though. Because don't go for 1 to 1.5s here, 1 to 1s here, 1 to 2s here to break even. Stick to it. I stick to my 1 to 1s because that's what works. If I'm risking 30 to 50 points, in my opinion, that's wide enough a lot of the time to be able to make sense of a trade. So I'm break even at 1 to 1. If I'm risking $100, I'm breaking even at $100. I'm risking 200, I'm breaking even at 200. That's just what I do. If you want to break even at 400 when you're risking 200, that's perfectly fine. Just make sure you actually stick to it. You know what I mean? And breaking even, you're probably going to break even a lot more times than less when you're doing this. But I guarantee you, like I said, not losing money feels way better than losing money. You may miss out the chance of making money sometimes, but you still didn't lose money. Like I said, defense is key. Keeping your money safe is key. But any people here that play video games or some shit, when you're a defender, it's always the easiest, right? When you're defending on any game, whether it's sports, shooting games, anything, defending is they always have the advantage. So we got to take advantage of that, because when you're on offense, you slip up. You do things because you're moving too fast. You got to play defense when it comes to trading. Be smart, be strategic. That's the main thing. So, okay, so we talked about breaking even. We talked about stop losses, TPs. Like I said, your TP always just really depends on your risk reward. Okay, let's see. When it comes to a trade, there was something someone talked about earlier. I told him to remind me. I feel like this had something to do with it. Where was it at? Where was it at? Do y'all remember what it was while I look for it? Where is this at? Damn, y'all was going crazy. Okay. Damn. It was not at 5 a.m. I'm tripping. Where is this at? Give me a second. I'm gonna find it because there was a question here that I waited to answer. Okay. There we go. It was you, Marley. You motherfucker. Bro, it was you. I just found where it was. I'm over here struggling to find it. But here, I got it now. But you said how to know when to hold or exit a trade. Like when the candle wick is playing with TP. So in this case, I'm feeling like you're talking about when, say for example, you're holding to your TP. Say maybe it was right over here. Let's just say this whole trade was what we were risking. Let's just make it seem a little bit more realistic and make it look like something like that. So it maybe looks like an actual, like a 1 to 2 trade. Let's say your TP was right here, right? Because I feel like this is what you mean. And say price starts like playing around, like all buy it, and now you're kind of getting your mixed emotions. Like, oh, I don't know if it's going to do it. Should I exit? Should I not exit? What should I do? So in this case, most times the best thing to do is to let it keep doing what it's going to do and do nothing. And by that, I mean continue to wait for your target, because you can guarantee to secure your trade. Now, when would I guarantee? Because this is when it all comes into situational. Because right now, this trade TP up here, this would be a 1 to 1, like a 1 to 2.5. So if you were risking $100, this trade hypothetical right here, this TP would be $250. So it'd be a little bit more than 1 to 2. So in this case, if I was already up a 1 to 2, which in this case I already was, like here, if I would have been in this spot, like waiting, say, I don't know if it's going to wait for it. I don't know if I should hold. If I'm up my 1 to 2 and I'm like contemplating, I would close the trade. But say you're not up your 1 to 2 and now you're contemplating, I would continue to wait, because I would rather follow the rules and not follow the rules. I would rather lose following the rules than do something I'm not supposed to and then regret it after. Because if you now you get out the trade before your target gets hit, and then it's just consolidating, and it psychs you out just to do it anyway, you're only going to be upset. Even though you probably still only made money on that trade, you'll fuck around, get into another trade, trying to see if it's going to go higher. You'll try to reverse trade it at the high. You'll do a whole bunch of dumb shit. Trust me, I've done it before. There's a whole bunch of people here that probably done it before. It's just what it is. But have rules behind it. If you're up your 1 to 2 already, close that trade. If you're not up that 1 to 2, wait for it to hit TP. That's my like rule of thumb. And like if it's playing with your TP, like I said, like this, most times, unless you doing nothing is gonna save your mental capital. It's gonna save your sanity. Because if you do something and it goes wrong, you're only gonna be upset. But if you do something and it goes right, yeah, you're gonna feel good. You'll be like, I saved myself. But more times than less, just do nothing. Let the rules happen. The market's the market's job is to make you psychs you out. That's all it does. It will consolidate for hours just to get people to get out, just to keep doing what it was gonna do. The market's gonna play with you. Trust me, it's going to play with you. You got to understand just to follow the process and the rules. Regardless if you win or lose, just follow the process. So, which one? Okay, so if you're up a 1 to 2, essentially, if you're risking $100 and you're up $200 on that trade, if you're waiting for a trade like this, say is playing around with your TP. So say you're not up a 1 to 2 yet. Say like in this case, if you were like this, you would be up like a 1 to 1.5. So you're not technically at that full $200. You were risking 100. You're probably up like 150 at this point. So you're not at the target yet. He was essentially asking, if it's playing around with your target, what should you do? If I'm already up my 1 to 2 and I'm starting to contemplate if I should hold it, I'm just going to close it. If I'm already up my 1 to 2, I'm going to close it. But if price starts playing around before it hits my target, but I'm not up my 1 to 2, like right now I'm up 1 to 1.5. So instead of being up that $200 minimum, I'm only up 150. I wouldn't close it. I will continue to wait for it to at least get there. And if it goes all the way against me, I'll be break even at that point. Like I'm up 1 to 1.5, I would have been break even. So I can't lose still. So that's why it's just better to just wait a lot of times. But it's really situational, like I said, on like where you are in price at that moment. Because I could say hold for your TP, but if you're already up like a 1 to 7, then why the fuck are you holding? You know what I mean? You good. Take some partials or something. Do something. More people would do that than you would think. It's crazy. But let's see. So that was that question. That kind of, I'm glad I reminded, because that was a good timing with it. Now, everyone be safe, stay productive. I'm gonna talk to y'all tomorrow. Oh, and I'm gonna have this the recording posted, and apparently, it's not WAP, it's Whoop.